ESG investments are falling. Is that permanent or just an economic cycle? That's what we're going to talk today. Welcome to the channel. My name is Lena Sakai. I'm Green Business Post editor. And today we are in this dilemma of ESG. There are some people that do not know about this ESG tendency that has ESG investments have dropped significantly, and I'm going to show you numbers. I read an article of professors in this Stanford Business School. Here is the article. Is ESG a luxury good? First, I'm going to show you the numbers these professors they raise to show that ESG is really declining. So, number of companies citing ESG on earnings conference calls. So we have here the companies are from ESP 500, and from 2018 we see that it has increased this hitting of ESG, and then it gets in 2021 is the highest point, and then it starts falling. Then we have the flow of funds in ESG funds. It's in billions of dollars here. 2020, 2021, it was high, then it started falling, and 2022, 2023, it got very negative. Here we have average shareholder support for environmental and social proxy proposals. So the same tendency, it grew, got a peak in 2021, and then started falling 2022, 2023. The same here, environmental and social proxy proposals submitted and approved. And here in the approved, you see it grew, and then 2021 was the highest, and then 2022 felt, and 2023 felt even more. So these numbers shows the tendency, the ESG investment falling, the interest. And these professors, they compare ESG with luxury goods because of the economic cycle. So they explain that we are in a crisis now. We have inflations, the prices are high. There is an energy crisis in Europe, a war happening. Now it's two wars happening. Investors, they feel like they have to save their money. They think more about the risks. So they start not investing on ESG because many ESG topics does not have the financial justification. So in the crisis, they start investing less on ESG. And then they are asking, is that going to increase again when the economy grow again, gets a prosperity situation? And the luxury goods, they explain how it works. Like the logic in a luxury good is like the person they wants to buy luxury products, and if the product has a higher price, it's better so that they can show their status that they can buy that kind of product, and that they have good financial condition. And ESG has something to do with that because of this showing off, because it's beautiful, because it's nice, because it's like when you show you have money enough to invest in ESG, but not it does not necessarily brings the returns. Like they explain here that because of the issues does not have this financial justification, many of them. So you have to have money to spend, and they seeing it as a cost or a spend that will not return, that you will lose from your profit. So this is the the correlation they make. And we have here some very interesting questions they raise. So I will bring it to you, and I will try to bring my opinion, my understanding of execution and management as an entrepreneur. So they say that more recently, demand for ESG has subsided and support for these type of initiatives has collapsed, like you saw in the graphics, in the numbers. Is this change in sentiment permanent, or will it rebound when economic conditions improve? Has ESG permanently peaked, or does its demand reflect the economic cycle? So in my point of view, the conditions help, of course, the economic conditions. Like I already said, when it's a crisis, investors tend to save and manage better and with more care their money because they're not earning that well. So they need to be more careful with the money. And this permanent or economic style, is it like going to grow again, the investments in the ESG when we get out of this crisis? And I think it might, because there are I think some type of people, investors, some are very worried about global problems, climate change, the ESG issues, environmental issues, social issues, and their concern is strong enough to them to make them invest again on those issues. But there are some investors that they when they lose their money, they don't like it. It's kind of a trauma, and they don't want to lose again in that issue. Like if they lost in ESG, they don't want to invest in ESG anymore. It became a trauma. So I think there are these kind of profiles, and because of that, this economic cycle can be a factor on that will influence investments on ESG. But as we experimented the first time this ESG investment, and many people might have lost their money, I think many people are traumatized and might not invest again. So I think there are these two profiles, and economic cycle will is a factor. If this is the kind of content you're looking for, subscribe to the channel to receive more videos on ESG management. Other issues they raise about these luxury goods. Some evidence exists that ESG can be likened to a luxury good. During times of economic prosperity, shareholders express a willingness to sacrifice personal financial benefits to see its objectives advanced. But in times of adversity, their willingness to suffer personal financial loss drops. Is this description of ESG accurate? If so, what does this say about the economic utility of ESG? On the balance, is ESG a net contributor to financial performance or a net cost? Is ESG a nice to have or a must have? So I will bring my opinion as an entrepreneur, as a manager, executor. Like I said before in the previous question, there is this investor profile that are willing to sacrifice personal financial benefit because they are really very worried about the ESG issues. So there is this kind of investor. What does this say about the economic utility of ESG? ESG is a net contributor to financial performance or net cost? I think both. I think ESG is nice to have or must have, both. Many ESG issues, like because they're dealing with global problems, they are nice to have. They're beautiful. You as a company to say that you're contributing, you're helping global problems. That's very beautiful to show. Like the luxury good, beautiful to show that you can buy something very expensive, like uh, Rolex, something like that. But it's a must-have too, because there are many ESG issues that they bring return to the company. And I'll bring you an example. For example, that you see that's obvious. If you know how to hire a person to be your employee, a person that's your company's fan, that loves what is a talent, is an excellent professional, that behaves professionally and delivers the work, is very engaged. That person, if you bring more, you know how to choose and find those kind of talents, of course your company is going to increase its competitiveness, its deliveries, and its results. Can you see that? So this kind of work of bringing this kind of people, it is ESG. You're investing on your people, your employees. You're investing on better results, governance, on the strategic in the operation. So it is ESG and it brings results. But the problem is most companies, they don't execute well. They don't know how to measure, hire people. That's a huge problem nowadays. So most issues, ESG issues, they don't have a good execution. That's why the results are not going to be good. Most impacts are not going to be positive, and they're going to be a greenwashing, not because they want it or because they know, because they don't know how to do, how to execute. They don't have the quality enough. So these financial performance on net cost, some many times will be a net cost because of that. They don't know how to execute. They don't know how to relate that to the strategy of the business. And I'll go to the last question and explain the whole scenario of logic that we use on ESG Plus, as it's different from how it's been done nowadays. So they ask here, a few years ago, many companies took a scattershot approach to ESG, investing in a broad basket of initiatives to demonstrate their support for multiple constituents. Today, companies are more selective, prioritizing those with sound economic justification and clear link to long-term financial performance or risk reduction. How do boards determine what stakeholder initiatives are central to their business model? How do they measure the financial benefits of these? Does the economic justification for investing in certain stakeholders' initiatives depend on a point in the business cycle? Should it? So I can explain how ESG Plus logic, the logic behind it. It has everything to do with performance, with return, this quality, this logic behind the business. So ESG Plus, and me as an entrepreneur, I saw the context of business so that they could be able to adopt ESG issues. Business in general, they're small and medium size. But this is applied to the giant ones because management is very difficult to everyone. But seeing the majority, the vast majority are small and medium size. So what's their problem? They survive. They don't have leadership, not good leadership, and they don't have process. They don't have data. They don't have uh, not very well managed. Many times they don't even know the financial numbers. So they need to sustain their business so that they can be able to hire better, hire a leader, create processes, so professionalize their business. And then they will be able to hire a team that's specialized on ESG issues, specifically like the climate change issues or recycling, so they can professionalize their impacts. So this is the logic: sustain, professionalize to impact in a more relevant way, significant way. This logic applies to any organization. First, they need to sustain their business. And some of the issues that we put on ESG Plus in the governance and the sustain part is first the business model. That's how business is created. With what's the solution? What's the problem you're solving, and what's your solution? And what are the ways you can earn money with that solution? Is there other ways to earn money, and your revenues can be a recurrent revenue? So all this kind of work has to do with sustain, innovation, how to deliver more value to your clients, how to differentiate more from your competitors. Then we have security, we have communication, so many issues to sustain the business. As we are entrepreneurs, we know that. So we start with that to strengthen that, to solidify the business so that they can go to the next step. That's very difficult, to professionalize the business, find good leaders, find good, create a good team, create processes. There's a lot of problem in processes so that the business can continue by itself, almost by itself. But the team will know what they have to do. So the business will like work by itself, and then they will have more money left to focus, to professionalize their recycling. So usually business recycle, but they don't know how much they recycle, how much residue they in total, and if the material is being really recycled. So they don't have this professional work. And after they sustain and professionalize their main processes, then they can focus on a team that will take care of recycling and will know the numbers. So that's the logic that we use on ESG Plus in our tool. So when they say if the companies are more selective, prioritizing the issues, the economic justification, it has to be since from the start. It always has to select and prioritize. They should not shoot everywhere to see where if they're going to hit something. No, they should always think on the sustain, and then if they're already well solidified, then professionalize the work. There are many issues of professionalize the company, like in the corporate governance. They create policies, uh, governance policies, the environmental policies or social policies of the company. This is professionalized. uh, you have to create you write your ethical and your uh, anti-corruption manual. That's professionalize the business. So I think you're understanding here. And about this, what stakeholders initiatives are central to their business model. So uh, we already said the sustain part, it will be always central to the business model. We will always think on a business model. How do they measure the financial benefits from this? So this is very difficult. This is when you are in the impact. You're sustained, then you professionalize, then you will professionalize here the impact. Then you have a team to measure all those financial benefits. After you pass solidify your business and professionalize it, then you'll be able to have money and time and team to do that professional work. And about the business cycle, if depends on the business cycle, yes, it has everything to do with the timing of the company, of the moment, and of the operation. So, what did you think about the questions they raise? Aren't they interesting? Do you have any other questions you thought yourself, or would you answer different from me? So don't forget to leave your comments, your opinions, so we can understand what the community is thinking, so we can learn from the community. If you like the content, support the channel for free by liking and sharing the content with people that might benefit from it. And don't forget to subscribe to our newsletter because the social media not always deliver the notification. This was the content of today Green Business Post responsible impacts for sustainable communities.